Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the Week in Focus for the week beginning March 21st. Well, after a 2-week period with 8 major central bank meetings, I look forward to a week with none. Several central bankers do speak, however, including several high-level ECB members and a number of regional Fed presidents, most of whom are non-voting members of the FOMC, though. The big day of the week is Tuesday, when the preliminary market PMIs from several of the major countries, including Japan, Germany, the EU, and the US, are released. Unusually, the IFO index and ZEW survey will be released on the same day, giving a very detailed view of the German economy. The figures are expected to show a modestly accelerating expansion for both the EU and the US, which could weaken euro-dollar slightly, in that it makes some Fed tightening a bit more likely. For the U.S., we'll learn a bit about the real economy from the Richmond Fed survey on Tuesday and durable goods on Thursday. Both the Empire State and Philly Fed surveys beat expectations handily. Will the Richmond Fed survey do so too? Existing home sales on Monday and new home sales on Wednesday will round out the mediocre data on the housing market that we've seen from the U.S. so far this month. The UK reports its CPI on Tuesday and retail sales on Thursday. The Bank of England last Thursday said that the risk of Brexit, quote, may also delay some spending decisions and depress growth of aggregate demand in the near term, unquote. So it'll be interesting to see whether this is reflected at the retail level too. Retail sales growth is indeed expected to continue to slow, which could prove negative for sterling. As for Japan, we'll get to learn more about their inflation situation when they release their various CPI measures Friday morning Japan time, including the new core CPI, which excludes fresh foods and energy. In any event, none of the measures is expected to show a significant acceleration in inflation. Indeed, the Tokyo CPI for March is expected to fall back into deflation. So they shouldn't expect to do anything to alter market expectations of further Bank of Japan easing action later this year. Finally, the Canadian government announces its budget on Tuesday. Finance Minister Morneau has already predicted a deficit of more than 18 billion Canadian dollars before any new spending measures. The new Trudeau administration has pledged to undertake a massive infrastructure spending program in an effort to boost the economy, as well as reforming the tax system. Now, the Bank of Canada said that it would incorporate the impact of these measures into its new projections, which will be released on the 13th of April. Thus, the new fiscal plans will directly affect monetary policy and thereby the Canadian dollar. All things being equal, a more stimulatory fiscal policy should reduce the need for the Bank of Canada to ease monetary policy and therefore be positive for the Canadian dollar. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.